Hello everybody, thank you for joining me. This is Intro to Accounting exam number 2. We'll jump right into it. So our first question is talking about inventory methods, FIFO, LIFO. In this first one we're going to be doing FIFO Periodic. So FIFO means first in, first out, and periodic inventory is we're going to save all the sales. So here's a sale of 1,500, here's a sale of 2,000. We're going to save those sales for the end of the period. So the best way to go about these questions is to draw a timeline. First, we started off with 1,000 units at $5 per unit for costs. Then we purchased 2,000 units. We sold 1,500 units, but again, we're doing a periodic inventory system, so we'll save that for the end. We'll skip that. We purchased 3,000 more units at a cost of $8 each. And that's all the purchases we made. So here's our sale. We sold 1,500 and 2,000. So that's a combination of 3,500 sold. If we're using FIFO, FIFO is first in, first out. So of all these units available to us, we sold the first in, which is 1,000. We sold this 2,000, and we sold 500 from these. So we're left with 2,500 units there. Now, the question is asking what our cost of goods sold is, what our ending inventory is, and what our cost of goods available for sale is. To figure out cost of goods available for sale, we obviously look at all the units that we had available to sell originally. So we had 1,000 units at $5 each, 2,000 units at $7 each, and 3,000 at $8. So that gives us 5,000, 14,000, and 24,000 for a combination of, let's see, 9, 13, $43,000. So there's our cost of goods available for sale. To figure out our cost of goods sold, we look at the units that we sold. Well, we sold this 1,000 units, and they had a cost of $5 each. We sold all these 2,000 units. They had a $7 each cost. And we sold 500 from the 3,000 units that each cost $8. So when we multiply this out, this is 5,000, this is 14,000. And this is 4,000. So that gives us $68,000. That does make sense. Let's see. 500 times 8, 4,000. 3,000 times 8, 24,000 plus 14. 5 plus 14 plus 4. Oh, this is 23,000. Don't know how I got that number. So our cost of goods sold is $23,000 if you add all those up. Now finally, it's asking for our ending inventory. And so we just look at the units we had left. So we had 2,500 units remaining, and those each cost $8. So multiply that out, and you'll get $20,000. There we go. An easier way to do that is to remember the relationship cost of goods available for sale minus cost of goods sold gives you ending inventory. So we could have taken 43,000 as our cost of goods available for sale minus our cost of goods sold gives us our ending inventory. Now let's figure out the cost of goods available for sale, cost of goods sold, and ending inventory using LIFO periodic. So again, a periodic inventory system, we'll save the sales for the very end, but we're going to use last in, first out. Now the cost of goods available for sale will stay the same every time if we use the same numbers. So cost of goods available for sale is still 43. And to figure out cost of goods sold and our ending inventory, it's best to make a timeline again. So we start off with 1,000 units. We purchased 2,000, skipped the sale. We purchased 3,000, and then we sold 3,500. Using LIFO, which units did we sell? LIFO is last in, first out. So the last inventory in is the first one out. We sold all 3,000 units of there. So we're left with 500 more units to sell. So we're going to sell 500 units from there. And we're left with 1,500 units and 1,000 units. So our cost of goods sold is the units that we sold. So we sold all of these units, 3,000 units, at a cost of $8 each. And we sold 500 units from these 2,000 units, which each cost $7. So this is 3,500. This is 24,000. Add that up, and you should get 27,500 as cost of goods sold. And so to figure out ending inventory, we can use this relationship using cost of goods available for sale minus cost of goods sold to give us ending inventory, or we can just figure it out by our using our timeline. We have 1,000 units remaining that each cost $5, and we had 1,500 remaining at a cost of $7. Multiply across. 1,500 times 7 is 10,500. Add those together and we'll get 15,500 as our ending inventory. And remember, these are dollar amounts. So $43,000, $15,500, $27,500. And finally, we'll use average periodic inventory to figure out the same numbers, our cost of goods available for sale, cost of goods sold, and ending inventory. So once again, our cost of goods available for sale is still the same, $43,000.